Let's pick up on the markets now. The local trade facing positive sessions this morning, with riskier assets still showing signs of recovery after last week's rough sell-off. Carmen Mpelwane is portfolio manager at Absa Asset Management. She joins us now to talk us through the latest market moves. Carmen, good morning to you. So your overall sense of how the markets have opened in early trade after that firmer trade in the previous session?
Yeah, so JSE up very strong this morning, 1.15% to date. And that's largely driven by the industrials, number one, and banks. We've seen strong recovery in those sectors. As you've mentioned, coming off a significantly weak last week. So a lot of the data has been churned and processed, and so we're now seeing that recovery coming through.
Yeah, let's talk about the South African Reserve Bank, which has released its leading indicator for April. Talk us through that particular data and what it tells us about South Africa's economic standing.
So we did see month-on-month down 0.3% in the month of April, keeping in mind that we did have the flooding as well as public holidays over that period. But having said that, this was largely driven by a decline in vehicle sales, as well as a decline in US denominated commodity price export index as well. So I think that we are seeing a pullback in the economy. This shouldn't be a surprise, based on the fact that we are seeing interest rates increasing. We are seeing the governments both locally and globally trying to rein in inflation as well. So this would be expected, albeit disappointing.
Yeah, let's talk about Tencent Holdings, which has slashed its stake in a Chinese education technology firm. It's called Learn Technology Holding. Talk us through that decision.
So this, I think, was a very strategic move on Tencent's part, keeping in mind that last year the Chinese government had a significant clampdown on online streaming and education resources that were doing so for profit. And this was one of the platforms that suffered because of that. We did see a turnaround in the last few weeks where they adjusted their platform to do live stream shopping instead. And that has seen a six-fold increase in the share price of Learn over the last 2 weeks. And over these 2 weeks, we've seen Tencent reduce their holding from 9% to 1.6%. And I think this is largely to ensure that they remove themselves from the arena where the Chinese government has the ability to clamp down on the ability of their operations.
Yeah. Let's conclude with City Lodge, the hotel announcing that its occupancies improved to break-even levels. What does that mean? Your overall sense in terms of this voluntary operational update that they've issued, including their trading statement?
So I think the key thing here, obviously, to remember, we've seen a lot of pullback in the tourism sector. However, there's been recovery as we've gone through the pandemic. So in January, City Lodge had occupancies of about 30%. They peaked at 58% in May, but there was pullback again in April. And that was largely driven by the floods in KZN, number one. Also, City Lodge are coming off this rough run, have seen a move to firm up their debt facilities. There are negotiations for that, as well as selling some of their assets in Kenya in order to pay down some of this debt. So we are seeing a recovery in terms of occupancies, but not to the extent, I guess, that we'd like to see profitability again for tourism sector.
Carmen Mpelwane, thank you very much for that markets update. She is portfolio manager at Absa Asset Management.